time to spotlight the world of AI. Joining me right now is Michael Elias, Vice President and Senior Equity Research Analyst covering the communications infrastructure sector over at TD Cowen. Thank you so much for being with us. There's no doubt we've seen the AI craze for the last couple of years. It certainly doesn't seem to be subsiding. You see in the latest earnings reports. I mean, I think about how Meta really kicked it off to really give us a glimpse into how much they're going to spend on AI going forward. What's on your mind when you look at this path for the AI craze going forward?
Yeah, I would say the first thing that we're thinking about is the ability to get data center capacity in order to deliver the benefits of AI. If you look at Meta, if you look at Microsoft, Amazon, Google, all of them are accelerating their adoption or usage of data center capacity in order to deliver on the benefits of AI. I would say that in the last year, we've seen about 5.8 gigawatts worth of data center leasing on the part of the hyperscalers in total. And that's really important to note because as you put it in context, all of New York City uses about 5.5 gigawatts worth of power. So we're talking about the largest tech companies as they look to deliver on the benefits of AI, taking as much power as all of New York City. And as part of that creates some issues on the electrical consumption standpoint. And one of the things we note is that we see electricity consumption by data centers as we enter the age of AI increasing to 6.6% of U.S. electricity consumption, and that's up from just 1.5% in 2018. So material re-rating in the power consumption associated with data centers, and there's going to be a lot of spend associated with that as we look at the path forward.
And it's pretty amazing because we were already worried about the electrical grid, trying to figure out how we were going to plug in our EV vehicles. That seems so far out of my mind at this point, because when you're talking about how much power we need exponentially, it almost seems it seems unrealistic. I mean, I know every time I do a story and I hear about these companies and they always say data centers are doing well. Of course they are. I mean, that's no news flash to me or anybody who's paying attention, but it almost feels like, how are we going to get there?
Yeah, that's a great question. And what I would say to you is that data centers are certainly additive on top of the load growth that we're seeing from electric vehicles, right? And AI really serves to turbocharge all of that demand. What I would say is that there is hope. As we look at the path forward, we see really 5 things that are happening in the market that are part of the evolutionary process that's already underway. And I'd say one of them is with the AI training workloads that are out there, you have the unique ability to bring the data center to where the power is. So these data centers don't need to live in the major markets that we've seen historically, like Northern Virginia, Silicon Valley, and so on. You can bring them into more remote locations where there is power still available. I'd say also as part of that is that there are a lot of manufacturing assets in the United States that have been dormant for quite a while that we have the ability to repurpose and turn into data centers. And importantly, the power footprint of both of those are quite similar, and they sit on top of high capacity transmission lines, which is important. I want to build on that point quickly. The transmission lines. Investing in transmission lines is going to be critical. And that we had some funds get released for transmission as part of the Infrastructure Act that was passed. But more of that will really be necessary in order for us to bridge the gap. And then also looking at nuclear and natural gas cogeneration to put it right next to where the data centers are. That's going to be important. But looking long term, we see nuclear and particularly SMRs as a critical way to bridge the gap here as we look to power these data centers and ultimately deliver to society the benefits of artificial intelligence.
Yeah. Can we go through some of the names here? You have about 10 names on your research note, the picks that you have. Can you pick out a few? I'll let you, since these are your, it's at least 10 names here. I see Cetera and others. Which names stand out to you as potential beneficiaries, the growth, the winners?
Yeah, so what I would point out to you is that, at least within my coverage universe, definitely see Equinix as our top pick. It has a high market share of the interconnection data centers in the United States and globally. And as part of that, as we think of the move past AI training into AI inference, we're going to see more need for those data centers that really exchange the data and allow the enterprise to be able to tie their existing workloads together with leveraging the benefits of inference. As part of that, I see them having a healthy balance sheet, very strong returns, over 20% returns on the part of Equinix. And as part of that, I think their ability to participate in that growth as we move into the inference phase will really manifest and ultimately drive the stock higher. So undoubtedly really Equinix as our top pick as we're thinking through the benefits of AI for data centers.
Yeah, EQIX, the ticker symbol there. What about some of the others that are listed here? Some others that are sort of clawing at the heels of Equinix?
Yeah, so within the publicly traded data center universe right now, we just do have Equinix and Digital Realty. I will say that I think Digital Realty is positioned to benefit on the hyperscale side. But as I consider relative valuation between the two of them, I'm seeing Equinix have structurally higher growth as well as structurally better returns relative to Digital Realty, and yet is trading at a discount to Digital Realty. So no doubts the Digital Realty will participate in this, and we saw that manifest through the record bookings that we saw for Digital Realty in the first quarter. But nonetheless, as we're looking for a compelling valuation trade here, I do think that Equinix really stands out, just given that strong growth, strong returns, and ultimately we should see that valuation inflect.
Right, understood. I mean, when it comes to trying to power, and I think Digital Realty is DLR, but when it comes to trying to power the grid and EVs too, do you have a final thought there? I mean, how are we going to do this? I mean, we've actually already seen shutdowns, blackouts, rules, don't charge your car. When we think about how, data center demand is just booming, coupled with EV adoption, which seems somewhat inevitable over the next decade, to at least in certain part. Final thought here, how we're going to do this. Are these EV makers in a good position? Are the chargers for the EV makers,
What I would say to you is this. Final thoughts here is that we as a society need to put the capital in for incremental generation and transmission capacity, but specifically transmission capacity. If we look at where data centers are located, they tend to cluster next to major cities, and in major cities is where you have you're seeing the electric vehicles emerge. So really a concerted effort to invest in transmission infrastructure, I think, is going to be a key over the long term, and behind that, bring in incremental generation capacity. But look, with America, where there's a will, there's a way. So I'm optimistic in terms of our ability to handle the challenges that are ahead.
All right, Michael, great to see you. Really love when you're on the show. Thank you so much. Looking at key names and obviously the trends that we need to know. Michael Elias at TD Cowen. Thank you.